Tax filing alert for Canadians. One small mistake on your 2025 tax return could delay, reduce, or even pause your CPP and OAS payments. If you're retired or planning to retire soon, you need to hear this before you file. Why this alert is serious. For millions of Canadians, retirement income is not optional. It is essential. CPP and OAS are not extra money. They are what pays for groceries, rent, heating bills, medications, transportation, and basic dignity. And yet, every single year, thousands of seniors unknowingly put these payments at risk because they don't fully understand how tax filing connects directly to CPP and OAS. Many retirees believe that once they start receiving CPP or OAS, the amount is locked in forever. That is not true. In reality, the Canada Revenue Agency reassesses your situation every single year after you file your tax return. What you report, or forget to report, determines whether your payments stay the same, increase, decrease, or get delayed. In 2025 and moving into 2026, CRA has introduced stronger verification systems, faster data sharing with Service Canada, and tighter income monitoring, especially for seniors. That means mistakes are caught faster, reviews happen sooner, and corrections can affect your payments with little warning. This video is designed to slow everything down, explain it clearly, and help you file with confidence, not fear. The Canada Pension Plan is based on what you contributed during your working years. The more you earned and contributed, the higher your CPP benefit can be. But CPP is also affected by when you choose to start collecting it. If you start CPP at age 60, your payment is permanently reduced. If you start at 65, you receive the standard amount. If you delay until age 70, your payment increases significantly. CPP is considered fully taxable income. That means every dollar you receive must be reported on your tax return. If CRA finds that your reported income does not match CPP records, it can trigger a review. For people who were self-employed, CPP calculations are even more sensitive. CRA looks closely at self-employment income, deductions, and contributions. Errors here can result in retroactive CPP adjustments, sometimes years later. Old age security works in a completely different way than CPP, and this is where many retirees get caught off guard. Unlike CPP, OAS is not something you earn through years of work or contributions. Instead, it is based on three key factors: your age, how long you have lived in Canada, and, most critically, your total income each year. That means OAS is constantly being checked and recalculated, even after you have already started receiving it. Every time you file your tax return, the CRA reviews your income and sends that information to Service Canada, which then decides whether your OAS payment stays the same, goes down, or in some cases is partially taken back. This review happens quietly in the background, without any action required from you, which is why many seniors don't realize their OAS is not fixed or guaranteed at the same amount forever. What makes this especially stressful is that even a temporary increase in income can trigger an OAS reduction, known as the OAS recovery tax or clawback. A single RRSP withdrawal, selling investments, realizing capital gains, receiving a pension lump sum, or reporting foreign income, even just once, can push your income over the threshold for that year. The most confusing part is timing. The clawback usually does not happen right away. It often appears months after your tax return has been processed, when your monthly OAS suddenly drops with little warning. By that point, the extra income may already be spent, leaving seniors feeling shocked, unprepared, and unsure what went wrong. This delayed reaction is one of the biggest reasons retirees feel blindsided by OAS changes, and why understanding this system before filing your taxes is so important. What's new with tax filing rules? Over the last year, the way the CRA monitors income has changed dramatically, and this is something many Canadians still don't realize. Today, the CRA no longer depends only on what you personally enter on your tax return. Banks, investment firms, pension administrators, employers, and even some government programs now send income information to the CRA automatically and in near real time. That means when you file your taxes, the system is already expecting certain numbers. If the income you report doesn't match what the CRA has on file, even by mistake, your return can be flagged for review. These newer systems are designed to instantly detect missing slips, spot sudden income spikes that look unusual, and automatically trigger benefit recalculations. Once that data is shared with Service Canada, your CPP and OAS can be reassessed much faster than before, sometimes within months instead of years. What used to take a long time to show up as a problem can now affect your payments quietly and quickly. Late filing has also become far more risky than many seniors realize. Even if your income is very low, or you believe you don't owe any tax, failing to file on time can still have serious consequences. The CRA uses your tax return to confirm eligibility for programs like OAS and GIS every single year. If there is no return on file, the system may assume your status cannot be verified. This can lead to temporary OAS suspensions, interruptions to GIS payments, or delays while your case is reviewed. For someone relying on these payments to cover daily expenses, even a short interruption can cause stress and financial strain. That's why filing on time, accurately and completely, is no longer just a formality. It's a critical step in protecting your monthly income and avoiding unnecessary surprises. The OAS clawback often catches seniors off guard because it is not based on gross income, but on net income, which is what remains after certain deductions. This means that many different income sources are quietly added together by the CRA, sometimes without retirees realizing the full impact. Your CPP payments, any employment or part-time income, RRIF withdrawals, investment earnings, capital gains from selling assets, and even foreign pensions are all included in this calculation. A retiree may feel financially stable month to month, yet still cross the clawback threshold on paper due to a one-time withdrawal or an unexpected gain. When that happens, the reduction does not come immediately, which creates confusion. Months later, the OAS payment suddenly drops, leaving people wondering what went wrong, even though the change was triggered by last year's tax return. As income rises above the threshold, OAS is reduced gradually, not all at once. This is not a penalty or a mistake. It is exactly how the system is designed to work. However, the real problem is that many seniors do not plan for this in advance, which turns a predictable rule into a stressful surprise. Understanding how the clawback works before filing taxes gives retirees powerful options. Income can be spread across multiple years instead of taken all at once. RRIF withdrawals can be timed more carefully, and large taxable events can be planned strategically. With the right awareness, many people can reduce or even avoid unnecessary OAS reductions altogether. Knowledge does not eliminate the rules, but it gives retirees control, predictability, and peace of mind instead of uncertainty. One of the biggest reasons seniors unexpectedly lose money from CPP or OAS is not because they did anything illegal, but because of small, easy-to-miss tax mistakes that seem harmless at the time. Something as simple as forgetting to report a T5 interest slip from a savings account can raise red flags in CRA's system because banks report that income automatically. Incorrect pension income splitting between spouses is another common issue. When the numbers don't match on both returns, CRA may pause benefits while they investigate. Many seniors also mistakenly report net income instead of gross income, which changes how OAS eligibility is calculated and can lead to clawbacks later. Foreign income is often ignored because it feels distant or insignificant, yet CRA requires it to be declared, even if it was taxed elsewhere. Self-employment income, side work, or occasional consulting is another area where seniors slip up, thinking small amounts don't matter, but they do. And perhaps the most damaging mistake of all is filing late or not filing at all, which can cause automatic suspensions of OAS or GIS. What makes this especially dangerous is that even one small error can quietly trigger a benefit review months later, leaving seniors confused when payments suddenly change or stop without warning. Before you file your tax return, it's critical to slow down and take control of the process instead of rushing through it. because one small oversight can quietly affect your CPP or OAS for months. Start by carefully reviewing every possible income source, including pensions, CPP, OAS, bank interest, investments, RRSP or RRIF withdrawals, and any side or self-employment income, because CRA already has much of this information and will compare it to what you submit. Next, log in to CRA My Account and cross-check the slips CRA has on file against your own documents, making sure nothing is missing or duplicated. Take extra time to confirm pension slips, since even a minor error in pension reporting can trigger reassessments or payment delays. Then, estimate your net income before filing so you understand whether you are close to thresholds that could affect OAS or other benefits, allowing you to make informed decisions instead of being surprised later. Most importantly, file on time even if you cannot pay immediately, because late filing causes far more problems than owing money, including benefit interruptions and reviews. In the end, remember this: speed does not protect your benefits. Accuracy does, and a careful, well-reviewed return is the strongest defense for your retirement income. During tax season, scams and fraud attempts increase sharply, and seniors are often the primary targets because scammers know how important CPP and OAS payments are to daily life. These criminals deliberately create fear and urgency by claiming that your CPP or OAS benefits are about to be stopped, suspended, or reduced unless you act immediately. They may call, text, or email pretending to be from the CRA, using official-sounding language, reference numbers, or even spoofed phone numbers to appear legitimate. It is critical to remember that the CRA never threatens arrest, never demands payment through gift cards, prepaid cards, cryptocurrency, or wire transfers, and never asks for personal or banking information through unsolicited phone calls or text messages. Any message pressuring you to act immediately is a red flag. The safest approach is to ignore these contacts entirely and rely only on official CRA communications, such as mailed letters, secure messages through your CRA My Account, or deposits that arrive through your normal direct deposit schedule. Staying calm, informed, and cautious is one of the most effective ways to protect both your benefits and your financial security. Financial stability in retirement doesn't come from one big decision. It comes from a series of smart, consistent habits that work together over time. Building even a modest emergency savings cushion can protect you from unexpected expenses like medical costs, home repairs, or sudden price increases without forcing you into panic withdrawals. Tracking your monthly budget, even loosely, helps you see where your money is actually going and gives you control instead of uncertainty. Many seniors don't realize how valuable community programs can be, from energy assistance to transportation and health supports, which can reduce expenses and stretch retirement income further. Open communication with family members is equally important, especially when financial or caregiving decisions may affect everyone involved. And finally, thoughtful withdrawal planning, knowing when and how much to take from pensions, RRSPs, or RRIFs, can prevent unnecessary taxes and benefit reductions. When these small steps are taken together, they create a safety net that reduces stress today and helps prevent much bigger financial problems in the future. Understanding exactly how your tax filing impacts CPP and OAS payments isn't just a good idea. It's one of the most powerful steps you can take to protect your retirement income. Filing correctly, on time, and with full awareness of the new rules can mean the difference between uninterrupted payments and costly delays. Don't ever assume your benefits will arrive automatically. Government systems are precise, but errors and delays happen, and you could lose hundreds or even thousands if you're not careful. Stay informed, check your statements regularly, and keep all your tax documents organized. Take control of your retirement by planning withdrawals wisely, tracking deadlines, and asking questions when something seems unclear. Knowledge is power. It protects your hard-earned income, preserves your independence, and gives you the peace of mind you deserve. Act now, review your CPP and OAS status today, and make sure your tax filing puts you in the driver's seat of your retirement. Don't wait until it's too late. This content is for educational purposes only and does not replace professional tax or financial advice. Always consult the CRA or a qualified tax professional regarding your personal situation.